Now, against popular opinion, I've decided to possibly name today's episode Bottom Trades because the market has not been kind to us
Ooh,
for a few weeks now. I'm joined by Greg Guenthner. Gunner, good morning. I know it's been a rough couple weeks just because the market is anything it gave in December, it seems like it's just, I mean, the signals are the opposite now, which kind of like last year. Last year felt a lot of up and down. There was a lot of chop, but now we're back in the grind again. So, is that what you're seeing on the screen this morning, at least?
yeah, definitely. And earlier this morning, it looked like things were going to creep a little bit higher. Some of the stuff that hadn't been working lately, small caps, biotechs, were moving into the green, and those are all kind of resetting back into the red right now. And we're back in this chop again. I don't mind a directional market. I don't mind if a market is trending lower. We can still profit off of that. But when you get into these choppier situations where um, things aren't as clear as you'd like them to be, it makes for some difficult trading. We really have to take a step back and really see what's happening before we can pull the trigger on new plays.
Yeah. So real quick, let's give everyone, I'll do a quick disclaimer just because we need to do those every time. Obviously, on today's top trades call, we're going to be talking about trading and investing and all trading has risk. And anything that myself or Gunnar covers on the call shouldn't be considered personalized investment advice. That said, let's get down to our agenda. We've got some crazy stuff happening in the market because I know, at least from my watch list and my portfolio and my spec account and all these different pieces, this market feels very yucky. Yet, you look on CNBC, you look in the newspaper, S&P's hitting all-time highs. We're going to cover that. We're going to do a little bit of Bitcoin follow-up. We want to talk about sort of the underlying pieces of the market of why things are going up or down. We're going to also get into earnings season, which is coming up. Well, just started. And then we've got possible conversation about some small caps, biotechs, and then we did this a little bit last week, but we're going to let Gunnar go into tickers that he likes, some watch list, and if we want to do a little bit more ticker fest, where we just, if you've got comments or throw them in the Q&A, we can go over any tickers that seem like a consensus that we can give a look for the group on. So, Gunnar, without further ado, I will let you take this. The S&P's at all-time highs. You're feeling good, right?
All-time highs. Well, I mean, that's just it. Like what you said on the news, anywhere you look, they're going to be talking about, hey, we're at all-time highs, everything's looking great, and that's fine. But what has really happened, and this is the main thing, this is the main focus, and why the market has changed so much over the past week, is expectations for what could happen at the Fed meeting in March have drastically flipped. Less than 2 weeks ago, the consensus was 80% chance that we're going to get a rate cut in March. And if you remember, what triggered the melt up rally in November, December? It was Powell signaling that, hey, we're done. The hiking cycle is done. It got dovish. And so that kind of gave the green light for everyone to buy back those risk sensitive assets, the growth stocks, stuff like that, that had been absolutely pummeled in during 2022 and much of 2023 that were chopping along. Everybody bought all those stocks back. Well, last week, that script got totally flipped very, very quickly. So we had this drastic change in expectations from 80% of folks thinking that, hey, the Fed is going to cut in March, and now that number is below 50. So we're below a coin flip on whether or not we're going to see that first rate cut in March. And so what has happened is the trading action is all reverted to what was happening before the melt up rally that occurred here in November and December, and what was happening during the third quarter. We've talked about this a bunch before. Everybody was piling in to the quote unquote big safe stocks. What was propping up the market during Q3 of last year? It was Magnificent Seven stocks, your mega caps. It was semiconductors, your bigger semiconductors. And what's the stuff that's been breaking out last week and this week? It's been your Metas, your Googles, your Microsofts, your Nvidias, your AMDs, all that stuff. Everybody is ditching their growth stocks and they're buying back those big and now overbought stocks that we were just trying to ride to stay afloat back in Q3 when there was all that uncertainty in the market. So pretty quick flip on that, which has led to some choppy conditions. Obviously, we're seeing the big push higher in the averages, but there hasn't been a ton of participation. Instead, what we've seen is the mega caps, the bullies in the room, these are the stocks with the huge market caps are lifting the averages up, while there's a lot of little stuff that's been suffering and pulling back, and some of it pulling back pretty drastically. I mentioned this morning, Matt, in the Morning Reckoning, about how small caps have been absolutely battered so far this year. And you can see, S&P at new highs. We go and look at the Russell 2000 here, and up until a couple days ago, it was moving straight down here and was negative on the year, while we have the NASDAQ pushing higher, and we have stocks like NVIDIA that just look like world beaters. Look at how far extended this has been. And obviously, we talked a lot about this breakout here at $500, but this thing went up $100 in a hurry right there, and only a couple red candles that I can see in this chart right here. Very overbought right now, but you can see what folks are willing to chase, and how people are reacting to news in this sector. We talked about this one too, SMCI. This is, I don't want to pat myself on the back with this one because I don't own it. This is one of those stocks that I wanted to own once it started firming up, because I felt like super microcomputer could be the big NVIDIA semiconductor mover of 2024, and it certainly has turned into that, but it's left me behind.
Yeah, it firmed up in one day.
Yeah, it moved up 36% on Friday. Oh, huge mover right there, and that has led to the entire sector going kind of parabolic here. If we look at SMH, you can see how we were looking at this level, one of the first groups to break out, and obviously bullish. We like that. We like it when leaders lead, and semiconductors have been a very important leader in this market. And you can see here them breaking above those July highs, one of the first groups to do that back in November, retesting and undershooting those July, August highs right there in early December, and then just taking off. Yeah, they had a little bit of a gut check at the start of the year right there, but that turned out just to be some quick profit taking, and then pow, just zooming higher. Again, all about the recalibrated expectations here. Folks really don't know what to think about what's coming in March. We got a little bit of, I wouldn't say hot inflation data, but a little bit warmer inflation data than the market wanted to see. And that type of news is bad news right there for the bulls. They want to see cool inflation data. They want to have some assurances that the Fed is going to start cutting sooner rather than later. And that's what everybody's been focused on. Yeah, and this is nothing new. This is what the whole market has been focused on since the 2022 bear market, grinding through 2023 and up until this year. It's all about the Fed and those expectations. And when they change as quickly as they did, that's when you get this sort of musical chairs about like, oh, I'm selling my Tesla and I'm moving into NVIDIA or whatever. You have all of this jockeying for position in the market right now, which is causing a lot of the chop that we're seeing.
Yep. What other than semiconductors, anything else that's helping? I mean, it's just Mag 7 and safety stocks? Anything else that's helping prop up the S&P otherwise? That's basically it.
No, that's not basically it. I mean, we do have some decent looking sectors. Financials are looking pretty decent right here. You can see that they had the quick gut check right there. Again, notice how this chart's a little bit different from the semiconductor chart, in that it took a little bit longer to break above those early 2023 highs, and then we consolidated here. We had the gut check, and now we're moving higher. A little bit of a slower mover, but still very much up near its highs right there. Industrials are looking pretty decent. If you look at the XLI here, you can see it's a very similar type of structure where it's breaking above those mid 2023 highs and then retesting them, and now trying to push higher right here. So it's not so much that everything looks terrible. It's just that there's a lot of stuff that's just moving back and forth, while you have the stuff that does look bad, the growth stuff, the stuff that had some of the sharpest rallies in December is totally resetting now on the other side. Everybody's just sort of in this hurry up and wait mode, saying, okay, is that it? Is that all we're going to get from these stocks? Is it over? Or are they going to catch at some point here? Are they going to find support somewhere along here and push higher? If we look at our growth proxy, which I always go back to ARK Innovation, because this is the emotional growth proxy that kind of defines this sector right here. You can see how, I have this line drawn right here because this has been a base, 18 months or so in the making, where it's trying to come out of it and then explodes higher off of those late October lows. And instead of retesting this level and at around $50 and then trying to push higher right here, this has been bleeding off ever since then. And, down 10% over the past month, about 9% year to date. Right here, obviously the exact opposite performance of the NASDAQ 100 and of those bigger stocks. So you have people rotating out of the Cathie Wood specials and back into your mega cap stocks and doing it very, very quickly. This isn't something, that's been building for months and months. This is something that happened, bam, just like that. And now everybody's recalibrating and trying to adjust their trading strategies, especially short-term trading strategies moving forward here. If we're going to have breakouts that are failing, then we don't want to be chasing a lot of those stocks. We want to be setting up to play maybe some moves to the downside. We want to be trying to look in other sectors that might take up the slack. Where's the baton going to get passed to next? I don't think this is a time to, necessarily say, I'm going to put all my money into SMCI. I'm going to just dive into semiconductors heavy right here. I think those are going to have to rest too. They're obviously overbought right here. But where is the hot money going to move to next? We saw a little bit of rumblings of some short squeezes yesterday and this morning. That's kind of cooled off along with the rest of the market. It feels right now that we're just sort of marking time. We're waiting for the next shoe to drop,
One of the questions that we're getting a lot of, and it's common for anybody that's in the markets, it's like, oh, you're trying to do is say, hey, I want to buy stocks that go up. And on the other side is, okay, if we're going to start hitting a downdraft, let's talk about that for a second. I know that you guys have a downside play on. You have some puts on, I think, Zoom.
Yeah.
How do you think out when to tiptoe into those waters now that we're in this choppy market? Because if we would have just continued through December, it's like Santa Claus rally, everything kept going and everything, the trend stayed intact. Now it seems like a lot of those high flyers have all come back down to earth, like you said, and it's possibly time to start looking on the downside. Walk us through how you think about that and when to tiptoe into those waters. And are you, this is basically a rhetorical question, but like, are you trying to call the top, or how do you pick a company like Zoom
Right.
on the downside compared to other companies?
So as always, and I always go back to this, but I feel like it bears repeating. I'm always taking into account the greater market environment. What are the averages and indexes doing? Are breakouts extending? Are stocks that are breaking out holding those breakouts, and are they moving higher from those areas, or are they breaking out and then retreating back into ranges? And we're seeing a lot of the latter happen right now. I've been going through things like, if you go through the top 10 holdings of ARK and you go through some of these tech growth stocks, you can kind of see what I'm talking about. Obviously, there's going to be the stocks that are getting hit with external forces like, Coinbase, because of everything that's going on with this Bitcoin reset that we're seeing from the Sell the News ETF approval event. But when you see big moves like this, these big parabolic moves, when they start resetting, where are they going to catch? And you start thinking, okay, with a stock like this, you find these little consolidation areas, and they're not very big, obviously, because this was one of those stocks that just went straight up for almost 2 months right there. But you look for these areas right here where the stock paused and rested and got a little bit choppy, and maybe you had some smaller candles there, some consolidation before breaking out again. What happens on the way back down? Does it act the same way? Obviously, the answer is no on this one. It did try to consolidate right here and catch, but then broke through these levels and moved lower. This is probably going to need to find some time to reset and level out, maybe for several weeks, maybe several months before it really gets going again, because we have here like kind of what some traders jokingly or not call like an Eiffel Tower type formation, where we have it going straight up and then straight down the other side right there, making this very narrow kind of Eiffel Tower mountain peak on a stock like this. So on something like this, obviously, I wouldn't be looking to trade it on the long side. However, if you have a growthy stock that's setting up pretty well and that's finding these levels, and that's trying to catch something like Roblox. And again, I own shares of this in a longer term account. But if you're looking to trade something like this in the shorter term, you're looking to see how it extends off of some of these moves. So obviously, with a stock like Roblox, and this is a volatile name, by the way, and it has earnings coming up in early February. So it might not be exactly tradable right now, but we can look at the chart and we can say, okay, we had this big gap higher and we've kind of gone down and we've retested that level right there around 38, and we're bouncing off of that level. It attempted to extend higher this morning and is now tailing off like a lot of these other stocks. Like I said, there's been a lot of jockeying for position, and a lot of these morning moves really aren't sticking right now. And we're seeing some more, distribution type action throughout the market. but we want to see how these extend off of these marks right here. Like this has been in a pretty substantial downdraft since it broke above 46. It retreated all the way back down to 38 right here. We have a nice 2-day bounce forming right here. Is it going to extend and hold this 42 level and move higher off of here? If not, then we're probably looking at more of a topping pattern in something like this. Some people might look at this and say maybe that's going to be some sort of head and shoulders in the making. Obviously, it wouldn't confirm until you got a pretty substantial drop here into this gap, maybe down to 36. But at the same point, we want to know if these levels are going to hold and it's going to extend higher, because right now we're seeing some pops. You look at like PLTR, that's a pretty popular tradable stock. And you can see I already have a line drawn right here when we were looking at that downdraft from the start of December when it really wasn't playing nice. And we talked about this, Matt, how this was kind of a crowded trade. I
Yeah.
felt like it had
Yeah.
too
I'm
many
in the balance
eyeballs
here.
on it. But you can see here yesterday, big gap higher, posted a 5% gain, but definitely tailed off and failed to hold 18 bucks. And now is just sort of marking time right there. Is a breakout like this, this is not like a very substantial breakout, but is this gap higher going to hold? And is this going to level out and try to push higher toward 18, 19 bucks? If so, this whole consolidation, this whole pullback area, it might be over. But it might not be. We're really kind of in a wait and see to see whether a breakout like this really wants to hold and push higher, and whether that speculative money really wants to pour into a play like that. Somebody's asking about Tesla right now in the chat. That's kind of the same deal. It's come back down here. It had kind of the false move, and we can almost like equate this to what happened in PLTR. You have the big huge consolidation. This sort of like slow, messy downtrend right here. It tries to break above it. This is kind of the area that we're in for PLTR right now. Is it going to do this? Is it going to sort of creep higher and then fail and go back into this range and then start testing some horizontal levels? Or is it going to retest that line and then try to attract some buyers and push back higher, push back above 260, 270? You look at Tesla right now, and you have to think like this is kind of a do or die mark for it. Things are getting pretty obvious with Tesla, where it's back down here, sitting right near those February highs from last year. It's got earnings coming up this week. When are earnings? Are they? They're Wednesday. So we have earnings tomorrow for Tesla. This is probably a no touch moving forward. If I looked at options right now, it probably is predicting I would say a substantial move, maybe 7-8% move at least, either up or down after Tesla reported earnings, obviously, since so many eyeballs are on a stock like this. But you see this, and I think Tesla is a pretty decent bellwether to what the speculative money might be up to, and it's just sitting here right at support. So this could kind of go either way right here. I know we have a lot of like the much more speculative stocks. Like I know like Lucid was up earlier today, and it's been just absolutely decimated lately. Former bubble stock Plug Power gapped higher and is up like 15% today, but this is kind of a dead stock walking right now. We are seeing some money pour into these, but I don't think any of these are really tradable moves right now. We're probably in kind of a holding pattern, a wait and see to see what Tesla is going to do for earnings and to see how the street reacts to that before kind of deciding what the heck this is going to look like toward the end of the week. We could be staring at a situation where there's a nice bounce off support, tradable bounce, where you kind of know if you're wrong. If it cuts below 210 right there and closes lower, you probably want to get out. Or we could be in a situation where it loses 200 bucks and it's a decent short, heading all the way down here into the 160s.
Yeah.
So, again, messy market situation right here. And with earnings and the drastic change in expectations for the Fed, everybody's sort of just waiting for the other shoe to drop before they decide how they want to play things.
Yeah. And this might be something, again, we're not going to go deep into the education on these top trade calls. We really want to just go through tickers and what Gunnar sees and what he likes. But this is probably a decent time to do it because I know, Gunnar, just knowing you as your friend and colleague, you don't like to gamble on earnings, especially not in a professionally run system like you've got going with the trading desk. But let's talk through this Tesla one because you say it's got earnings coming tomorrow, and then the market is pricing in. You can see this. Anyone, like if you get into options trading, whatever, you can go in and look at the options and the pricing and stuff, and you can see the market is pricing in an 8% move. And again, I'm guessing because I didn't look at this, but like an 8% move. And that 8% move could be in either direction. So the teachable moment, and I want to get your opinion on this, Gunnar, is that if you're going in to bet on Tesla options or on earnings, like a lot of people do that because they want the action. They're like, I think they're going to blow it out. I think they're going to whatever. You are starting at a heavy duty disadvantage because that 8% is baked into the price you are paying for the option, both upside and downside. So it has
Right.
to go beyond 8%. It has to go way beyond expectations for you to actually make your money. Is that how you look at it, Gunnar? Because I think a lot of people don't think that. They're like, oh, I think it's going to go up 8%. That'll make me a lot of money. And it's like, no, the market thinks it's going to go up or down 8%, and you're going to pay for it.
Right. Well, when you have a situation like earnings, a binary event where you're probably going to get some movement, and then a heavily watched stock like Tesla that can be pretty volatile, the implied volatility, in other words, like you're saying, the expectations for volatility are going to be higher, and therefore you're going to pay a higher premium on puts and calls heading into an event like that. And so with options, if you want to maximize your profits, you want to buy periods of low implied volatility that you think are going into periods of increased volatility. And if
Yeah.
you want that volatility to be on the upside, obviously, if you're buying calls, and you want it to be on the downside if you're buying puts, and that's how options work. It's a market that works off of those expectations. And so when you're coming into an event where the expectations are this thing is going to move, you know, you're trapping yourself, and you could be trapping yourself no matter what, because if you do have a situation where everyone's expecting a big move and Tesla just flatlines after earnings and no one really cares, then you're still in trouble because you bought it at a higher volatility, at a higher implied volatility mark, you know, and you're going to get crushed in that position either way. So yeah, I don't
Yeah.
like to necessarily play these events. I'd much rather play like pure price action, you know, and anticipate some of that momentum creeping into the market, either upside or downside, you know, at those key levels, rather than, you know, rely on an event that not only could produce a dud like we just talked about, but has to move in my direction as well, without any prior knowledge of how the market is going to react to that.
Yeah. And that happens on calls and puts. I mean, either way, you're paying for that volatility. That's what goes into the options pricing. So it just means you've got to be extra right at a time when everyone's placing bets.
Yeah.
Um, so it's just a little bit more expensive. Um, yeah, Rob was saying sell a put. Yeah, I mean, again, that's a different strategy altogether.
There's different
Um,
strategies you can use. Some people like, you know, play strangles or something like that over earnings, and that's fine if that's what you want to do. But if you're betting directionally, I don't think earnings are the best event to bet to have a directional bet into.
yeah. Any as a segue, I mean, and wherever you want to go next, but we've got a few tickers that have popped in here. I mean, we could look at DXY, the dollar index. We could look at UNG, which is the natural gas ETF. We could look at XOM, which is Exxon. Those are all big ones. DW, Robert just wrote in with DWAC. That's the Trump SPAC,
Right.
or what's considered the Trump SPAC. That one was blowing up yesterday. I think it was up
Is that
40%.
still, let's see if that's still, yeah.
It's going to be huge.
A bit of a wild chart. I would say this is an emotionally traded stock.
Yes.
Is that
Yes.
fair? Um,
Yes.
so I think with, what was it, Trump winning Iowa, it was up 88%. I don't really know how much that has to do with the actual company
No.
right here, or how tradable that particular move is. But it's certainly moving.
Yeah.
I get that. But like, yeah, a parabolic move like this, I mean, if we strip it down to just pure price action, pretend like there is no election, you know, and we compare it to something like semiconductors, you have a kind of a similar situation. Obviously, the magnitude's a little bit greater in a stock like DWAC. I think people call it DWAC, right? Is that fair?
Yeah.
Um,
Sounds good.
but you have kind of a similar situation where you have a parabolic move that's happened. It's going to be very difficult betting on this higher or lower from here, because you're out of options when it comes to like setting a level that makes sense for you as a trader. Because as a trader, you know, it's easy to get wrapped up into like, oh, it moved up 88%, you know, I want a taste of that on the upside, or I think this thing is going to crash. You know, once people come to their senses, I want to taste of the downside action. That's great, but you really need to be thinking about risk first. And when I say something like you have to be thinking about risk first, I mean, where are you going to get out if you're wrong? And for something like this, it's very difficult to really set that level because you're up here in outer space. You know, it's almost like going back and, you know, talking about a little bit of crypto, which I think we should probably segue into next, since Bitcoin is still not behaving or
Yeah.
not behaving as
Yeah, we can get to some of those tickers. We'll do tickers in the end. So some of those other tickers that we talked about, and I see in the chat, we'll try and hit those on the end as well. But I think this is an important segue, and we got comments about Bitcoin. So let's dive into this one because this is a big market.
Right. So how do you play something like Mara? Well, if you're playing a breakout and like, let's pretend like we don't know what happened right here. If you were trying to play some sort of breakout from this downtrend right here, back in November, December, there were some levels to trade against. You could say like, okay, I'll get in on something. Let's pretend like we don't know that sort of thing. I'll get in on this if it breaks out of above 11, and then I'm out if it's, if it retreats back into this range, back into this area, like in the 1020s. It might be a wide stop for somebody, might not be, but you can see where you can sort of mark those levels and say, okay, we're breaking out above this level. If it does dip back into that range, it's probably going to stay choppier for longer or go down, so I don't want to be involved in it. It didn't. It went straight up. Now you're in a situation where you might be saying, ooh, look at this thing. It's gone absolutely bonkers. I mean, how many days higher in a row could this possibly go? I want to try to short this. But you could say that at any one of these candles right here. You have the big breakout here at $20 where it gapped higher, and then you can argue that this is overbought anywhere along this run from $20 to $30. But if you were short, you ate it big time in something like this. So it's very difficult to short those big movers. Eventually they will crack, and you can see how this thing cracked, and now it's totally reset, and we're back down here in this consolidation zone right here.
Which,
But
from what you were saying earlier, that's a very reasonable, and that's why I think we like it. I trade Mara, I've got exposure to Mara, yada yada. But like that's why we trade Mara, because it's very well behaved as a tradable stock. Now it was crazy, but that's kind of what you want. You want big moves so you can make big money on options and stuff. But look, it consolidated right back to that little ledge, and I forget who called them bus stops. It was up a little bit higher. I do like the idea of bus stops.
yeah,
Mark W said, I call those bus stops because it's like all the people getting on or off.
that's absolutely right, because
Yeah,
you have the sort of change. You probably have some change in ownership when when the run finally slows down a little bit. Right here, you have people, and keep in mind, not everybody who's involved in the markets is using your same time frame. Everybody has different goals when they're coming in and out of stocks. You may have longer term shareholders selling. You may have shorter term people buying. You could have people. You could have day traders taking profits in all these areas right here, while you have people who are, maybe longer term bulls adding shares. So you have a lot of different shuffling for positioning in these stocks right here. And now we're back down here to the bus stop again. This might be a bus depot. We'll see how long it lasts here, and we'll see how many passengers get on and get off in this area right here. But this is a logical area, and that's what you want to look for. You want to look for these areas where things pause, where candles get tighter. We talked about this earlier this year when Mara was kind of going crazy here with all these really big candles. I don't like to initiate a new trade on the upside after a big move and you still have these wide ranging days, these big candles, whether they're red or green, because you still have a lot of extra emotions in the markets right here. And that's probably not enough consolidation to say like, hey, like let's pretend like we didn't know this downside move was happening. But right here, is this enough to have absorbed this huge rally and then this massive pullback? You have a rally here from $15 all the way up to 30. So you have it doubling in a matter of a couple of weeks. And then you have it losing $10 essentially in a week right there from 30, and then trying to push higher. That to me is not enough of a tight consolidation to say, okay, I feel good about this. We've reset, and this can go and retest 32 and go to $40. It doesn't feel like that to me. Yes, you got a few tight candles in there, but that's not enough. You go back here and you look at what it takes, and like again, these are smaller rallies, but look what it takes to bleed off some of that euphoria there, even in something like this. And again, different situations, but you can see here when it pushed off of $8 and went all the way to 12 right there, and then reset. Look how long it took it to chop along before it really started moving higher again and really broke out and then doubled here from 10 to 19. Obviously, Mara's kind of a wild stock. With wild stocks like that, I want to see these things die off. I want to see big candles turn into small candles and it get nice and tight, tighter and tighter and tighter and tighter, and then wait for the big push off of there. And again, you didn't need to buy it here. You didn't need to guess on any of these big candles right here. You could wait for it to break out. You could even wait until the next day right there, and set your stops, and then try to ride it the move higher right there. You don't need to be early on moves like that. You could just sort of wait and bide your time and see how it consolidates, and then wait for the big breakout. And that way, you're not sitting here buying on candles like this where you're like, all right, I'll buy it at $10 and see what happens. And then 3 months later, you're like, oh my God, when's this thing going to go?
yeah.
You can wait for these big moves, and then you're going to get the follow through on the other end of it. And again, this is a trading stock, in my opinion. This is not the kind of stock that I would diamond hand and say, okay, I'm going to hold this thing, come hell or high water and whatever happens. I'd much rather trade the fluctuations, trade the big moves in this, because when it gets going, it really gets going. And you can see here, we're back down here at the bus depot, like we said before. Are we going to get some tight candles here? Is Bitcoin going to cooperate? Just to segue into Bitcoin right here, it is losing this range that it's been in for quite some time. We talked about kind of the false breakout and how it tried to push toward 49. And then we got the sell the news event on the ETF approval right there. It's lost this entire range right here. I would say, if we're just guessing around 40K, got the false move and then the fast move in the other direction. And now we're breaking below 40 right here. Are we going to get a reset down here in the 37s, 38 range, at this shelf of former resistance? Is that going to turn into support, or is it going to need to give back even more of this? I don't know. I don't have an answer for that just yet, but that's what I'm watching on Bitcoin. As we talked about in previous calls, when you have a breakout like this that doesn't stick, you're going to have probably continued selling afterward. I mean, it did attempt to, right the ship and push a little bit higher here, but overall, this selling pressure from people that are disappointed and bought high up here is going to propel the stock lower for some time, and that's where we're at right now. Now we're breaking below these levels. So anybody who bought and held on the breakout here back on December 1st above 38, well, they're back to break even in the red. I don't think they're feeling super good about Bitcoin right here. So we'll see how it goes. But that's crypto for you.
I would warn everyone, again, you can trade. There's a lot of better traders on this call than I am. But the other thing, warning from narrative land, narrative of that ETF got that uptrend that is now broken. The next halving is coming in April. If you thought there was going to be a bunch of chirping on the ETF, there's going to be even more chirping on the halving. So that's coming in April. It's January. There's going to be a narrative at some point in time that starts trying to get some momentum going with Bitcoin. So I'd watch out on the downside on that thing, like trying to play the downside of it. Again, maybe that's a super contrarian trade, but I just think you're going to start getting a lot of chirping on that halving, and then a lot of people getting excited about Bitcoin again, as always. So in between
Right.
here and April, and then again, maybe April when the halving happens, maybe it's a sell the news again. But that's just fundamentally setting up and the narrative that I bet we're going to start seeing. You're going to start seeing halving all over the place.
Yeah, and I vaguely recall like back pre-pandemic when there was some halvening event in Bitcoin that I thought that might be a sell the news event too, and it actually ended up being bullish. I don't know if that's coincidental or not, but again, I'd much rather not trade these events, this event-driven stuff in crypto. I'd much rather just trade the price action. We don't have to worry about earnings with crypto, but we do have to worry about news sometimes. But just purely looking at the chart, even if we erase our minds of everything that's happened with the ETF stuff, and I see Steve commenting about FTX Trust has been selling their Bitcoin, and there's obviously been selling. GBTC has had huge outflows, but again, that all makes sense from a flow standpoint because you have a higher fee product being replaced by lower fee ETF. So obviously, like that money is going to move. It's moved pretty quickly right now. But all that aside, you look at this price action, and it's really tough to get bullish on this without it setting back up again to the upside. And we know how Bitcoin operates too. We could have a situation like we had in early 2023. And if I zoom in on some of this mess that happened back here, we had situations where we had breakdowns that turned into breakouts, and it did it more than once. It looked like it was going to extend higher at 30, and then it fell again. Bitcoin can be incredibly messy. You can get these great momentum moves, and then you get these flatline resets that just have these sort of, it's almost like these spasms here where you're flatlining at 26K, and then all of a sudden, it spikes up to 28 and then it's back down 2 days later before, you get the real move that's triggered, and in this case, Bitcoin actually moved before the rest of the market. At the end of Q3 right there in mid-October, it really started breaking out for real. So, again, I would pay very close attention to this price action right here. Are we going to have a case where we have a max pain market? And, guys that know me, from the trading desk and from other places, when I say a max pain market, I mean a market that's totally faking us out on both sides of the coin right here. Are we going to have a false breakout here that takes us to 49 and then all the way back into the range and undercuts. And then are we going to have a big dump here, which ends up with just another big rally above 40K and puts us right back into that same choppy range? I wouldn't put it past Bitcoin at all. It tends to fool more people um, uh, than you would expect. So, I mean, again, I'd watch it very carefully and see what happens here. As far as like the trading vehicles that I like to use on the long side, I think that all of them need just to set back up. I think, it's too much volatility. Let's see how Mara reacts at 16. Let's see if it can flatline here. Coinbase was a great mover. Again, it's given back a lot right here. I don't know if this is a good enough shelf for it to hang out for a while. It might need to go all the way back down to 110, maybe 100. It's really difficult to say right now. So we'll see what happens. But for now, I think there's better options out there. There's more important stuff really to watch. I'm much more interested to see what happens with small caps, biotechs, growth stocks right here. We have a lot of stocks out there that are looking strong and that are attempting to break out, and they're slowly creeping up to those levels. But are they going to hold and are they going to extend? I think that's going to tell us a lot about the market. You guys know Datadog. This is a pretty widely held software stock right here. Folks really are bullish on this stock. It's getting a lot of good press lately. We have a pretty substantial breakout, I would say, right along this neighborhood right here. It's such a big breakout that I can't even grab the line I'm trying to draw right here on this. But you can see here, not perfect, but definitely extending off those 120 levels into the 130s. It's pulling back a little bit today. Is this breakout extension going to hold and move higher? Are we going to see this retreat back down to this range right here? It's nice to see stocks like this that are working. And again, we can kind of move this line around if we want to, we want to think of it more as like, is it going to retreat back to, these 125 levels right here from December? But are stocks like this going to hold, or are they going to retreat back into their range? I feel like if we're in a sloppier market, we're going to see stocks like this maybe not extend as far as we think they're going to and not get those big pushes. Obviously, this one did a pretty decent job for the past few days, but when it does retreat, if it does come back down here to the 124, 125 range, will it actually springboard off this and continue to trend higher? Or is this just going to retreat back down into its range to be a big mess? If it's going to be messier for longer, then I think it's going to be time to thinking more along the downside plays. Because if you don't have the strongest stocks, like your D-Dogs, if you don't have those extending higher and really hanging on to those breakout levels, then how are the junkier stocks going to react? How are the Zooms going to react? How is Unity going to react? How are some of those growth stocks going to react that just haven't gotten up? They tried, this is Unity software, a pretty widely held metaverse software type play. If somebody bought down here in the $26 range and they rode it all up to 42, it's already given back all the way down here to 33, and it really hasn't broken above this very sharp consolidation that we've seen, this short-term downtrend right here. It's trying, it got a little bit of momentum on Friday, gave it back on Monday, but this is not showing us anything right now. This is still a hot mess. You can see the chart going back, pretty trendless, and has not gotten out of whatever this big messy base is that it's been building. And you can see going back all the way to the bear market of 2022, obviously this stock got chopped to bits. Nobody wanted to hold this during the rate hike regime, and it had some false starts and all that, but nowhere near completing this base on a weekly time frame or any time longer term time frame right here, and wasn't even able to get back to those July highs during the November December melt up right there. And now it's retreating again, super sloppy. But is it going to find a floor here, or is it going to just retreat back down here way down to its lows? Again, earnings coming up. We'll see kind of how we feel about these stocks during earnings season. Are we going to have a situation where tech earnings look bad or maybe just not good enough? And people tend to get spooked when that's the case and sell names like this that just haven't performed. So we'll see how they look. But this is sort of the gauges that I look at to say, like, okay, are we in a market that's conducive to breakouts, or are we in a market where breakouts might fail more often than not? If that's the case, then we don't want to be chasing stocks higher. We want to instead be setting up hedges. We want to be thinking about what's going to fall back into its range, what is going to maybe take some of that downside momentum off of earnings. Doesn't mean I want to play anything expecting earnings to be terrible. We talked about that earlier. That's not the case. I'm not trying to, make these big binary earnings bets. Rather, I'm just looking at the stuff that when earnings season is kind of, all with a box and a bow on it, all ready to go, and we kind of know what we're getting with these stocks. Are there going to be downside plays? Are people going to be selling these things into the second quarter? If that's the case, then we're going to want to be looking at like, okay, selling moves like this. If it's poking its head higher and then retreating back into its range, we can sell some of that and play the downside and play some puts. Because that's going to be the path of least resistance for these stocks. Even if the market's not really going down, if the market's chopping along and we still have breakouts that are failing, your best plays are going to be on the downside from the weakest stocks, because obviously they're not going to be playing nice and they're not going to be moving sideways. They're going to be dragging things lower.
All right, let's see. Why don't we do a little segue with some more tickers? And then again, we can wrap it up. This week is, as we've said, we're kind of dealing with what the market gives us, and it's been tough for trading out there. What about you've got CRISPR. You want to talk about that one? Did you already?
Yeah, I mean, this is
Yeah.
just another
Okay.
example of a stock that exploded higher during the melt up, and now we're in a situation where it's definitely consolidating right here. But is it going to go? Which direction is this thing going to go in once it goes? That's and pulling up stocks like this and watching how they behave. Obviously, like if we go back to here, we had kind of some messy consolidation here, and it kept on reaching above that 73 mark and couldn't hold. That was kind of a clue that maybe it was running out of steam here. Took the hard reset in mid-December and really hasn't done much since then, and is getting a little bit tighter. This is kind of a wilder stock, so you're not going to get like the super tight consolidation probably on something like this. But this is definitely an ARC component. It's a top 10 ARC component right here. But you're in a situation right here where is this producing just a more wider ranging consolidation here that's going to have to break one way or the other? And when it does, are you going to get some momentum in that direction, or are you just going to get more chop? You're going to get more mess. So again, maybe not the stock to trade. I mean, if it does bust above 68, 69 bucks and pushes towards 70, maybe the market's in better shape and we're getting better signals on the long side and we can take it. If not, and this thing, breaks below 60 bucks, there could be additional downside action, something like this, especially since I bet you there's a lot of people that said, okay, this is it, off of those November lows right there, and we're expecting a much bigger move and this thing to break out and continue. If those folks start getting disappointed, we're going to see more selling on something like this. And earnings on the 13th coming up. We got catalysts coming up for something like this. So this is worth watching. Even if you're not going to trade it, it's worth watching because it's going to give you an idea of where sentiment is. And if we know where sentiment is, then we have a better idea of what side of the ball we should be playing.
Yeah, and that's the key with what you do. You're looking at so many charts, however many of them. I mean, because again, there's just all these different charts happening, and you're not trading all of them. You're just waiting for the right setup in certain ones. This one could end up consolidating, popping, and then never trending, and you're just not going to ever do anything with it. As opposed to maybe you're keeping an eye on it, it pops, and then it starts trending, and there's a nice trade setup. That's what's putting all the probability in your favor, and that's what you've been really good at, Gunner. Here's some tickers. Why don't we rattle down these if you got them? We can go energy first. UNGXOM. UNG's nat gas.
Yeah.
Yeesh.
Well, nat gas had that big weather pop. So everybody saw the polar vortex coming down and nat gas spiked, and then it was a sell the news type of thing. But nat gas is a tough trade. I rarely try to trade this chart.
And again, now once we've started jamming a little education in here, just remember, like UNG, I believe I'm spitting from what I know from before, but right, they're running 3 months out on nat gas futures contracts, and then they're rolling them. That's what the ETF's doing underneath. So it's naturally got this drag on it. You can't just buy and hold UNG. You've got to be you got to know when the weather is going to break one way or the other, or when there's going to be a supply disruption or whatever. Play it and get out of it, as opposed to like a GLD that's a spot gold ETF. That one's not playing all those weird futures contracts that have drain on an ETF. So this thing isn't a buy and holder.
Yeah, it's
which
a
you guys
trading
probably know.
vehicle. Yeah, your position will deteriorate in the longer term, and it will not give you the magnitude of move longer term, that you're looking for on the long side with something like this. So it is definitely a trading vehicle, not something I would typically trade because again, It can offer these spikes up, but they're pretty quick. And you can see right here, everybody got bulled up on natural gas for a hot second, and then they were like, forget about it. They sold it. So yeah, not the prettiest chart right there. And it's totally reset. We'll see what it does from here, but not something I get too excited about, obviously.
Yeah.
Energy's been a tough one. You can see ExxonMobil right here. Totally resetting down here to the bottom end of its range. It's just right now coming off of those October lows, that area right there. Not looking, I mean, you could say this is looking kind of toppy longer term. Maybe it's just enduring a little bit of a reset. It could spike higher here. If it got back above 104, I'd feel better about it. But down here, I feel like it's in no man's land. And crude really isn't showing us much either. I guess the most bullish thing I can say about crude is buyers keep on stepping in around 68, $69, for light crude. So for WTI, there's definitely a floor somewhere in the high 60s, but we're not getting any momentum off of it, and you would think we'd be getting a little bit more with all the stuff going on in the Red Sea and everything else. You would think that something more would be percolating in the oil market, but it's not. And because we're not getting it, I'm sitting on my hands on something like this just because I just don't see the momentum. It's kind of flatlining here in between 70 and $75. Every time it looks like it's going to go, it gets smacked back down, and vice versa. It hasn't really done anything since mid-December. Again, you have an out if you're trading energy because you have a floor here where someone is stepping in and buying crude. But other than that, like, not super excited about something like this until it firms up and really starts to move. Maybe it will, maybe it won't, but I think there's better trades out there. A lot of questions about the dollar too and DXY. I mean, the dollar has been a pain. That has the dollar and yields have both started spiking, and that has caused some problems with risk assets, mostly precious metals. We've seen the bigger stocks kind of fight off this rise in the dollar right here, but you can see here it was chilling down here near 103 earlier this morning. It's pushing back toward those mid-December highs right now. There has been a change of character in the buck since early last week, maybe late the week before when it started perking up above 102 right there. I feel like that's pretty significant. If it gets above this 104 area here, that's going to be bigger trouble for risk assets in general. Probably will lead to choppier market action right there, more risk-off action in the markets. So far it's looking pretty short-term bullish for the buck right there, and you can see that reflected in what happened in silver earlier this week. Silver just absolutely got slammed. Obviously, it's trying to find a floor right here, despite the fact that the dollar is up. Silver was down another, 2.3, 2.4% yesterday. I'm not going to get super excited about precious metals if silver is underperforming as much as it is, and we're nowhere near the early December highs right there. This is just a complete mess of a chart right here. Gold is going nowhere. You guys know where I stand on this. I thought we were going to, after we consolidated the sort of fake out move to 2100, I thought we were gonna rip again right here to start the year, and the dollar had other plans, and now we're just kind of stuck. Again, it's not broken. This is just a kind of a have patience type situation until we see silver start to firm up and the dollar start to lose its grip right here. I can't get too short-term excited about gold right now. Miners are lagging too.
Yeah, gold, the one thing to say about it is it's strong in the face of the dollar still. I mean, it's not going bonkers, but it seems pretty strong considering the dollar's in a pretty decent little snapback.
Well, yeah, I mean,
Gold's
to
not
reiterate,
disappearing.
I'm not bearish long term. I'm speaking in the shorter term time frame, right now, like what's working now, what do I want to be involved in right now? And looking at GDX and looking at gold, I'm thinking that that's just dead money walking for the moment, and it could chop along. We could be in a wide range in this for a while until it gets its sea legs again, and we'll see. I mean, we got we got a lot of time before March. When it's possible that we have an even bigger change in expectations and sentiment and all that stuff.
Yeah.
So,
What about I saw C3 AI, so we could look at AI.
Yeah.
Again, I own that one. It's been ugly, but a little bit of a
Well, it stopped
bounce.
going down at
Yeah,
24.
hey, look, it kind of respected, hey, respected the AI gods there. Look, it respected that line.
Yeah, it respected the line. So I mean, there are buyers down there somewhere around 24 bucks. But again, like it's in the shorter term downtrend. It was getting perky yesterday. It was up like 6.5% out of nowhere. I was
Yeah,
like, okay. I mean, was there any real news about it? Trending stock, blah blah blah. So people were
yeah,
jumping in on it, but people were jumping in on a lot
yeah.
of kind of the more speculative names yesterday, seeing if they could get them jump started, and that really hasn't followed through today. So I'd want to see this back above 28 and pushing before I would even think about it. And I really want to see it above 32 before, thinking that we're going to get another move like we saw back last summer,
Yeah.
right here. Again, it's nice to see, if you want to think about this longer term, yes, it's super speculative, but it's in the right spot in the market for when, stuff like that heats up. But we're seeing these shelves of support come in at higher prices. So overall, if you want to take, a 50,000 foot view of something like this, it's not it's not time to read this stock its last rights just yet. It's just not time to really back up the truck and assume that you're going to get another big run like this. I don't think AI is dead at all. I just think that if we think about things in terms of what's important to investors right now, that's on the back burner because everybody, like I said, everybody is now laser focused on expectations for March and how quickly everything like that has changed. And so now we're seeing all the jockeying in position related to that. And people really aren't thinking about like, oh, AI stuff is really cool. So
Um, One other ticker, and then we'll kind of get wrapped up. EWG, and then if we want to talk anything uranium, I don't know if UTCC, that might be uranium, but EWG, is that Wisdom Tree? Which
I
one
like
is it?
CCJ. And again, we talked about this last week, back before we really got this big pullback. That's kind of what I was looking for because it got way too hot way too quickly. And we're still kind of down in here. Will it or won't it bounce at this level and continue higher? It's a tough trade. You have these trends that are pushing higher, and then you have these big thrusts off the lows, and then these resets. And I really want to see if it's going to get moving and close back above 48 again to kind of prove that it's going to like do this springboard bounce, um, above this level right here. But I like the fact that it's stalled out, that this drop has stalled out right here, in the mid 46s, because that's what the bulls needed it to do. I do think that from a narrative perspective, things are longer term bullish for uranium right now, which is great. And if we look at URA, which is the ETF, it's doing something similar right here. Obviously, there's a lot of mess in this chart. You have the big gap lower, down 7%, then the huge gap higher, up 7% right there to break out. Now it's retreated back into this level. Let's see what it does from here. I mean, I would like to get involved on the long side right here. I just don't want to get stopped out. I don't want to get jerked around on a trade like
Yeah,
this. But overall, I feel like there's something big brewing. If we go back and we look right here, and this is a logical place for it to run on the steam right here because we're looking at those former highs from 2021. So
yeah,
yeah, give it some time. Maybe give it some time to give us a big old cup and handle right here. In between 30 and 32 in a few weeks, and then really take off. And embark on a much bigger breakout. We can be patient on something like this, and see where it goes. Obviously, the move is not to just buy these big gaps higher. You know,
yeah.
let it let
You
it
want to pull
let it
up
work out.
EWG real quick?
What's that?
EWG, that's the
Yep.
Germany ETF. I didn't know it's iShares Germany.
Germans.
Steve wrote it in. Yeah,
Um,
that's what I was like. What are we doing here? This is German ETF. But then I'm like, oh, I wouldn't mind shorting the German.
no, I mean I think it looks fine. Obviously coming off of like uh like a rough couple years, 21 and 22. Um, if we're looking at this just from the most simplistic standpoint, I would say, um, let's see if it catches here and pushes and then 30 is your level. If it breaks out above that.
Oof.
Um,
I'm
you know,
scared of that
that,
one. I'm too fundamental, dude. I can't imagine imagine the US being like, well, we've done a bunch of dumb things politically, but if we're like, we're not going to do nuclear power anymore because of whatever, and then it's all of a
yeah,
sudden,
yeah.
then
I don't
all their
know.
energy gets shut down, and then they've got German like the farmers or like tractors are rolling all over the place. They're like, we hate this. We need more subsidies for energy, and then it's like, well, you kind of fucked up.
Yeah, I don't
10
I don't
years, you
know.
kind of screwed up.
I don't know. I don't know what's wrong with the Germans these days. I don't know what they're thinking, but
I think they're tied into the EU, dude. You tied into the EU, and all of a sudden it's like, who runs the EU? Like Greta Thunberg? I don't know. It's like
right. Yeah, I
can't.
mean,
And
look,
then
like
they
I
shut
would,
down the Red Sea. It's like you ain't getting Nord Stream. You ain't getting the Red Sea. You have no energy. You're being run by a bunch of people that are probably worse than Biden. It's a shit show. I would short that one, but I that has nothing to do with the chart, so I can't say anything.
yeah, I wouldn't get bullish unless it's over 30. It doesn't look terrible, but at the same time, like not super excited about Germany. It's not really on my list of things to get stoked about in this
There's
in this
one
market.
German I like. His last name's Guenthner.
Yeah. Well, thank you. I just yeah. I,
Yeah.
I I gotta
All
I
right.
gotta
I
call my
gotta shut
ancestors
up.
and see what's going on over there. But yeah, like thinking more along the lines of like what's going on in our market right here and where the momentum is. I'm interested to see how we consolidate this big move in the Nasdaq 100. Obviously, these are the big boys right here that are dragging us higher. Um, like, are we going to see these stocks reset? If we do see these reset, are the growthier names going to take the baton? Is all this worry about what's going to happen in March going to just sort of evaporate? We don't know right now. We're definitely in a choppy transitionary period for the market right here, and we're just sort of sitting tight and waiting to see, you know, what's the next shoe that's gonna drop right here. The chat, by the way, Matt, I don't know if you're looking at the chat. Everybody's really excited that you went on a rant.
Yeah, it's great.
Really
It's
trying to
like
get
top trades. I need to keep this to the other channels. It's like when I'm talking to Jim and we're just getting all ramped up. But yeah, I like shocker. I like that they bought puts on it.
right.
But yeah, we'll try and keep these more trade related. But I always bring in some of the logic behind some of this stuff. I mean, if you want to know
Right,
what's
sure.
behind that chart for Germany, it's like pretty obvious.
Yeah, I mean, I'm I guess fundamentally, I think the move that makes sense to me would be bullish uranium, bearish Germany. We'll see how it plays out in the charts, but that makes sense to me.
Yeah.
Sometimes what makes sense to me doesn't make sense to the markets, but that definitely makes sense to me. And so like that's if you want to try to attune your thinking to something like that, I say go for it. But right
Yeah.
now, like let's see how this week shapes up with like some of those stocks that are like in no man's land, the CRISPRs, the Palantirs, stuff like that. Are those things going to break down? Are they in deep trouble? Or are we going to have a situation where people get excited about earnings again? These are all just potential scenarios. Nothing I'm betting on right here, but I'm using it to take the temperature of the markets to see, how things could develop from here. I mentioned, to you that the Wall Street Journal yesterday came out with a longer article about how, like, well, that small cap rally is pretty much toast. That's all we're going to get. So that kind of perked my ears up a little bit that they would get super bearish on small caps right here after this big pullback that it was already bouncing from. We saw this, it established this sort of intermediary low right here. Yes, the momentum from this huge disbelief rally, this thrust higher here is gone. But are we going to have a situation here where we chop along and move back up toward that 200 mark? If we do, I don't see any reason not to get bulled up again. On the flip side, if we come back here to this $200 mark and it fails, it's probably time to bet on downside action. That there's obviously not enough buyers to push this, through and back above 205 to those highs, and it needs more time building this base that we've been waiting on for the past couple of years right now. So big important things happening in the markets. We're right there at some of these levels. We're right there with Bitcoin, some of those tradable Bitcoin stocks to see if those are going to level out or not. We're right there with small caps. They're climbing back up towards this level that's now resistance. Are they going to push through and give us long side opportunities? Are they going to fail and give us downside opportunities? That's what I'm looking at, just from a totally agnostic point of view, looking at these markets. But I feel like this is building back up. I don't, and again, editorializing, I don't see how we can continue to see all of this money flow into semiconductors and into some of these Mag 7 stocks without some type of come to Jesus pullback, gut check moment. It's been too much for too long. And to have everything all of a sudden flip on the other side of the boat where we're back to Q3 trading and saying, I just want to own NVIDIA and nothing else. It doesn't feel like a good strategy to me. moving forward, I do think we're going to see some different rotation, as this year progresses into different stocks and different sectors. I think we're going to move down the cap scale to those mid caps and small caps and have them play catch up again. Hard resets like that are part of the game. Fake outs like that are part of the game. Can this catch
Yeah.
and really push higher here? That's what I'm looking for.
Can you give a summary from like the perspective of like where we are, kind of how you're looking at the next week of trading, not necessarily a specific sector, but just in general as a trader, what's your 30,000 foot view or like I guess a recap of kind of everything we talked about?
Well, I want to watch a few things. Like I said, I want to watch semiconductors to see how they absorb these massive gains that have been piling into that
Mhm.
sector for the past few weeks. I want to see what happens with the snapback move in stocks like Apple that were kind of lagging and everybody's kind of piling into the safe plays like those. So I want to see how the Mag 7 consolidate and how they digest these gains. And if the money keeps on pouring into those safer trades, I want to see what happens with market breadth. Are we going to still see narrow market leadership? Are we just going to see the semis and the mega cap tech push higher? If so, I think some of the other stuff might be in trouble. Is the dollar going to continue to push higher? That's going to dictate a lot about how we feel about the markets. If risk assets are under pressure, then there's no sense in trying to chase anything that's pushing long. Are the popular stocks that are attempting to break out, that are right there at those levels and that are reaching, that haven't extended yet, like the D-Dogs, stuff like that, those tech names, are they going to continue higher or are they going to retreat back into their ranges? All of those things are going to kind of dictate how we approach the market moving forward. And when I say that, I mean, am I going to be short-term bearish and am I going to be playing downside action or am I going to be short-term bullish and playing breakout extensions? And again, the big elephant in the room too is earnings are really ramping up this week. We have a ton of earnings that are starting to hit. Tesla's going to be a big one, obviously. That can move markets. I think Netflix is coming up this week too, and it's just going to be bigger and bigger names in the weeks ahead. So we'll see how earnings expectations shape up because fundamental Matt, put on your fundamental hat real quick. All
It's
of
always
last
on.
all of last year's market gains were multiple expansion, right? It was expectations of things getting better. Well, rubber hitting the road right now. Are things actually better? Are these earnings going to be good? If they're not, then are people going to be recalibrating those expectations? And we'll see that in the charts, obviously. We'll see that in the price action.
Awesome. I think that's a good recap. Tons of things to keep an eye on. And again, there's a lot of moving parts. That's what the market is. It's not easy. Gunnar, one thing we should do next week, and if not next week, sooner than later, we got to talk election stocks. Again, that's going to be upside, downside, who wins, who doesn't win, winners, losers. So maybe we'll put that on the docket for some time coming up, and maybe we'll send around some surveys or questions in your morning chat and stuff with the trading desk, and see if
Yeah.
anybody's got any sort of like because DWAC, that's like this weird Trump SPAC. There's going to be things that start happening in between now, maybe Q2. That's a good time to trade election stocks because you don't have to worry about reality hitting. You don't need to be worried about like what actually happens in the election. You got to just trade what people think is going to happen, and maybe we'll see if there's some momentum in any charts that you like in the election stocks. So let's put that on the docket as well. Otherwise, thanks for everybody in the comments. We had tons of good comments today. We did a little bit of ticker fest again. We'll do one where we just do the whole show. We promised that one, but we got a bunch of good stuff out of the way. And Gunnar, we appreciate your again level-headedness, looking at the charts, digesting what we got, and trying to take our shots when we can. We appreciate it, and we'll see everyone next time.